Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going with part two, the stealing from the rich legally, because we're going to be buying up their assets after the economy goes down. That's right. Stay with me, ladies and gentlemen. I'm going to show you how we're going to get some of these assets because there's a correlation between price increases, interest rate increases, and people losing their jobs, GDP going down. There's results, and you can take advantage. So stay with me, stay tuned, and welcome. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. And once again, we're on the Stop Struggling Now YouTube channel page, and I want to thank you so much for being here. But please share the videos so we can help, one person, 10 people, 1,000 people, maybe millions. You never know who you can help. So let's get into how we're going to be stealing from the rich. First of all, the only way you can steal from the rich is when they hold assets. And once again, you here in the SSN Nation, I have to show you again, reveals the wealthiest 10% of Americans now own the majority of U.S. stocks, a staggering 89%. This was basically from October 19, 2021. This is why you have to think about investing in the stock market if you can. That's how we're going to steal some of this percentage from them. At one time, it was 92%. Now it's down to 89%. And after this next wealth transfer, which is going on right now, some stocks are down. Yes, ladies and gentlemen, year over year, 50%, 60%, 70%. But are you trying to hunt them down? That's the question. And so therefore, now would be a good time to consider buying stocks or index funds is what I'm trying to tell you. So therefore, I want to show you once again what we're looking at year to date. Today is July 6, 2022. So Dow Jones down 14.78%. NASDAQ down 27.63% and S&P down 19.61%. Overall average around 20%. That is significant, especially if you have larger sums of money. Think about it. If you had $1 million, now you only have 800, maybe less. Just by letting it sit there, or you buying on the dip and then it went down even further. All I'm saying is, this is how we are going to steal from the rich, ladies and gentlemen. And it's all legal because we're not actually doing anything except acquiring assets. So you have to think about the stock market. And I want to give you something, a playbook that I was talking about. This article from September 9th, 2021. At that time, you can read it here. Over 1 million Americans took 63 billion out of their homes. Earlier this year, the most since the 2007 housing bubble. Now, nobody talks about this other than here in the SSN Nation as the playbook on using your home equity line of credit and then going out here buying more assets. Those assets include stocks, could include crypto, real estate when it comes crashing down. All of those are assets, gold and silver, plus a business. You can go out and buy a business. Why start a business if you can buy a business that's already generating profits in asset? So they're taking money out of their bank account. You guys have heard me talk about this before. Out of their home, I mean, not the bank account, but out of their home. And then they're using it to buy what? Most people are out here buying used cars apparently because those prices went up. They're out here buying all kind of expense items. But apparently people were saying, let me put some money into the stock market. So if you start realizing in 2021, why was the stock market going up? Well, $63 billion in the hands of people. Some of those billions would find their way into the stock market, wouldn't you think? Because most people would think that, hey, the stock market seems to be going up a little bit, so I should invest in it. And at the same time, people were sitting there saying, hey, now's a good time to invest in crypto. So now a few more billions goes into crypto, thinking that you're safe and sound. But what happens after the people who took out the billions in home equity don't have any more money to invest to artificially increase demand? Because that's what this really is. It's artificial demand on the stock market, on the credit markets, and on real estate. That's what happened. People borrowed, they bought assets. Some, not all, but you can imagine $5 billion in any category is only 15 million. But either way, that would be a high demand and people are going to be paying those prices. So the prices would go up, whether it's real estate, crypto, or stocks. At the end of the year, after they spent their money, what happened? No artificial influx of money. The Federal Reserve started talking about tapering, giving money to their financial institutions, the hedge funds and banks. So therefore they can't buy up their own shares of stock nor enter into the crypto market because the crypto market started dropping 10, 20, 30, 40, 50%. Wipeouts. So again, and here's the last thing I want to show you. The Federal Reserve Wire funds service quarterly statistics. Look at something very interesting. Notice how they put this chart out here. Transfers originated, and they say number 49 million in first quarter of 2022. For all those who may be watching and don't understand what they're referring to with quarters, a quarter is every 3 months. So it's January, February, March is the first quarter. April, May, June is the second quarter, and so on and so forth. July, August, September is the third quarter, and then might as well go the whole thing. October, November, December is the fourth quarter. So the first quarter, look at the number, 49 million. Look at quarter four of last year, 52 million. And quarter three, 51 million. Look at this. This is millions of dollars going to banks, hedge funds, their friends, other businesses. You don't know where they are transferring this money to because they don't tell you exactly. The volume doesn't matter. The origination in millions, that's 259 million. That's interesting. Again, ladies and gentlemen, think about this. Even if I'm even wrong, $259 million you give to somebody, and what are they going to do with it? They're going to invest it, you would think, right? Pay off their loans? Highly unlikely. You're giving me money. So, again, think about those type of numbers being injected artificially, once again, loan money artificially into banking. So how are we stealing from these guys? Because once they stop this, because look, again, you guys already know, if you keep printing money and keep using artificial money, loan money to buy assets, and then increase the price of these assets, that loan money is actually additional money dropped on our market, dropped on the American citizens. That means inflation has to continue to go up until these guys stop doing this. When they stop doing it, you know what's going to happen. Prices are going to come down. Just what's been happening over the last 7, 8 months. Because they borrow, it's gone. Then you have to borrow again. It's gone again because it keeps going down. Then you borrow again, buy back your shares of stock or crypto or whatever you're doing, buying real estate, and all of a sudden you reach an apex, and no matter what you do, you're going to have to throw in twice as much money as you already threw out over the last 13 years, and you're not going to be able to do that and catch up. So sooner or later, inflation's going to set hold. The rising cost of goods and services are going to catch hold. And also, what else is going to catch hold? No food in the cupboards, ladies and gentlemen. In the grocery store, there's going to be food shortages because everything costs way too much. Transportation is going to have a problem because it costs way too much. So if you haven't been checking out going somewhere on a plane lately, you're going to be shocked. The prices have escalated all the way around, and this is all that's going to happen now. And there's one problem. That means less money can be going towards the asset class, the ones that we're going to be stealing from people, ladies and gentlemen, the rich. All right? So get your duffel bag of cash ready and make sure that you pick out what you're going to invest in with regard to the stock market. All right? You're very smart. Do your own research. Figure out what stocks you want to invest in, because we want to get that 89% down to 85% or 80%, because when they manipulate the market, you want to be in the market when it rises back up. Because remember, this 20 or 30% decrease, that means that it could rise 50, 60, 70%, and that could be the return that you receive on your investment. Just keep that in mind. Versus if you would have bought at the top of the level, even if it went up 20, 30, 40%, you still wouldn't be back to even. So that's why buying near or close to where there's a wipeout is always a good thing. And let me know what you think down below, if you think it actually we're at the bottom of the stock market or not. Now, let's get into here's some other money and other reasons last year, because this is from August 2021, last year when the crypto market was going bananas, from even now, August up until the end of November. You guys remember that. But here's why. Institutional money is pouring into the crypto market, and it's only going to grow. Institutional, maybe you don't know who institutional is. There's places like, here we go, Fidelity Assets. All right, BlackRock, the largest hedge fund, bought in. And not only that, these guys bought in like $200 million into Curve Crypto. All right, just keep this in mind, ladies and gentlemen. Keep in mind, they're getting their foothold in the crypto. Why do you think crypto goes down when the stock market goes down? Look at this. BlackRock adds crypto. And by the way, BlackRock, unbeknownst to you guys, why Michael Saylor's out here buying Bitcoin, BlackRock invested in MicroStrategy stock, which indirectly exposes them to Bitcoin. We're going to get into that. But look at this. They have under management $9.5 trillion in assets. You guys, somebody here watching this probably has money with BlackRock. And this is the advantage that hedge funds have. They can invest that money anywhere they want to. All right. Morgan Stanley Investment Firm, Global Allocation and Strategic Income Opportunities Fund. All right. These guys, BlackRock, this is the one, is also indirectly exposed to Bitcoin via a 14.56% stake in MicroStrategy. Holy smokes. All right. They have 14% of MicroStrategy. MicroStrategy at one time was up over $4 or $5 or $6 or $800. It's under $200 right now. That means that whatever 14% stake in it was at the time, that's a significant loss, ladies and gentlemen. More than 50%, more than 60%. That is significant. So now the question is, do you have balls enough to make investments? And you should have to keep paying attention to cryptocurrency. It's clearly not going anywhere when you have institutional buyers putting money into crypto silently. But it's not really that silent, is it? Because, like I said, there's Coinbase. And I'm sorry I have to keep doing this because they want me to do this subscription, but I don't see any way to get this off the screen. So I have to refresh it all the time. Now, crypto investment opportunities abound. These guys are putting billions of dollars into crypto. So that ought to tell you the top 10 percenters are doing it. you know where you need to ultimately be if you're not already there. All right? So keep that in mind. We are going to keep waiting. Some of you are saying, no, I'm dollar cost average down, which is fine. Everybody has their own investment strategy. But once again, this is how we are going to steal some of the assets from the rich. All right? Wall Street firms make crypto push to catch up with the cool kids. BlackRock backed a stable coin firm. Guess who they backed, ladies and gentlemen? Luna. And all I can say is they're backing a few people, along with Goldman Sachs. All right? And again, BlackRock is silently going around putting their money behind a whole bunch of different cryptocurrencies. All right? So keep that in mind. Goldman Sachs is there. JP Morgan's doing it. All of them is doing it. So all I'm saying is they're sitting here talking about catch up. This is crazy. Wild ride. Banks came around to crypto as Bitcoin took off last year. Well, see, from 2017 till 2022, it's still doubled. But nonetheless, it's hard when you buy up here at 60 maybe and it goes to 40, then it goes to 20. That's not good. And now here's the real deal. Institutional investors traded 1.14 trillion of cryptocurrencies last year. Traded. Coinbase Global. All right? So just keep in mind, they're in this game and you already knew that. Right? And here we go. The 2 trillion free fall rattles crypto to the core. There you go, ladies and gentlemen. $2 trillion of market share gone. And this is June 26th to June 27th. It's updated, but it's gone. That's money that nobody can reinvest in because the likes of a Luna, the likes of a Voyager filing bankruptcy, the likes of Celsius and BlockFi doing their deals, and never mind about the DAO projects exploding and going to zero, never mind about all these cryptos and altcoins that went to zero. All I'm saying is that money is irretrievable, which will help the crypto market go down. And all you're doing is you're joining the top 10 percenters. Now, back to something else. And the real estate market. You guys, I did a video yesterday in part 1, and I showed you the real estate market when it goes up, the interest rates and how that works, and when the price of the property or real estate eventually comes down, you know what's happening next. The interest rates are going to go up, right? So when the interest rates go up, real estate prices go down. This gives you another opportunity to steal from the rich because remember, these guys are out here doing games, right? They're out here playing games. The thing that the thing that Zillow has done, the thing that I'm trying to think of the Open Door and the hedge funds, the dirty work that they were doing. And that dirty work, in case you're not familiar with this, is, and I don't have it up, but basically, in your neighborhood, ladies and gentlemen, over the last 2, 3, 4, 5 years, there has been real estate in your area for sale. When people were putting their homes on the market and they're sitting there saying, okay, I want whatever, $400,000. And people were coming, ordinary citizens are walking in saying, okay, I love your house. This is beautiful. I'll give you the $400,000. And then they hear back from the realtor and the realtor says the magic words. I'm sorry, somebody put in a higher bid. So then you find out, wait, somebody bought the house for $475,000? What's going on? Who was this? Well, it might have been an overzealous person, or it might have been a hedge fund, or I always pick on Fundrise. It might have been a Fundrise fund. They could be in on it, where they're going out buying single family residences, multi-family residences, putting it in their portfolio to give people 5% return on their money annually. I believe it's 5%. And so you're going over and over again in major cities. You're sitting there like, I don't understand what's happening. Well, it's pretty easy if you have millions or billions of dollars at your disposal. You can start doing the math. How many homes can you buy if you have $40 million. And the home price is generally going to cost you $450,000. That's a lot of homes, ladies and gentlemen. Never mind when we get to the billion number, because you're not going to buy a billion, because that would be just crazy. But what you are going to buy is apartment complexes, and that's why a record number of apartment complexes have changed hands, because the dirty little playbook again, and I'll give you the double playbook. The dirty playbook again was they're buying apartment complexes, then turn around and your rent was $1,000 a month, but when you renew, you want a new lease? Okay, you can pay $1,300 a month now. Or if you want to do month to month, it's $1,450, $1,500 a month. They're raising the rent when everybody's lease comes up or when new tenants come in. And therefore, that's why they went for buying multifamily properties, to get out the mom and pop investors that traditionally buy investment properties along with businesses and corporations, because it's an asset. So once again, we're going to find a free fall because rental prices have to come down. These guys have overpaid for the property, the valuation. An investor would have said, hell no, I ain't going to take 3% return on investment for $10 million. But they said, no worries, because we're going to increase the interest rates 50%. So we're going to increase our ROI, or NOI in real estate terms, net operating income, because we're going to make more in revenue. That's the dirty little secret. And then we'll go back to the house. These guys bought the house for $475,000. But then you guys in the neighborhood are all happy. Hoo-hoo, my house went up. $75,000 is going to be the next appraisal, because there's 3 or 4 homes that were just bought for $475,000. We thought that was awesome. Yeah, well, these guys bought up about 20 homes. All right? And what you didn't know is those first ones they overpaid, that was just the tip of the iceberg. Because what they're going to do next, they're going to turn around and they're going to list some other homes for $575,000. $600,000, and now you're going, woohoo, this is great. Look at the real estate market. It's booming. I better buy some real estate now because it's getting too much. Well, you did. Interest rates were low. You helped them increase the value of the property 20% the last 2 years. Each year, 20%. Some markets, 30%. So once again, that dirty little trick they used, it worked. But now they messed up. Because when the property value starts coming down, remember, they borrowed the money. So they're in the same position where they have overpaid for the real estate. They're going to owe X amount of dollars. And now that $450,000 or $475,000, and now that $575,000 price that they put up there and some people bought, but now they're holding, all of a sudden, what if it's $400,000 value? Well, that's why you had Zillow had to give up the game. They said, wait a minute now, these prices are starting to come down. We're not going to be able to keep doing what we're doing. We'll see Open Door next. Redfin is over here begging the sellers to reduce their rates now. All of it's coming to a head, and therefore you're going to have to steal this real estate, ladies and gentlemen, when the timing is right. So sit back, relax, and do one of two things. We already talked about this with regard to real estate. Get your home equity line of credit right now. Take it out. Put that money in a safe and pay these guys their 5% a month. Because you could always take out the rest and just give it all back to them pretty much. And you have that little fees that you had to pay. But nonetheless, you want to have liquid cash handy, because when the stock market comes down, you want to be able to go there and say, you know what, that $400,000 house, if it drops to $200,000, you already have it in the safe. All right? So just keep that in mind. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And you know it's hard out here. I know it's hard out here. And it's about to get a whole lot harder. So you're going to have to make decisions. And along the way, you're not only going to have to pay attention to the assets, you're going to have to pay attention to making extra streams of revenue out of thin air as well, because the price and the cost of living is rising rapidly, and there's no way we can get around it except start a business, start doing something, make that extra stream of revenue come in the door. And with all that said, keep your head up, keep moving, and I'm out.